Welcome back to the channel. RacerX here, and today I want to film a quick video for you guys about some news that has just come down about Stellantis, about their potential earnings up through the end of the year, and Stellantis potentially cutting tons and tons of inventory and what that's going to mean for consumers going into the 2025 model year. It is definitely interesting, and it is a very fluid situation. If you guys are brand new to the channel, do me a big gigantic favor, hit the subscribe button. You can find that right over here. And off we go.
T-minus 15 seconds.
Does your car have what it takes to be featured in one of my videos? If you have a really cool, unique car, definitely take the time to reach out to me. You can find me on Instagram at RacerXNew, and also you can email me on my channel email at racerxofficial@yahoo.com. So a couple different ways to get a hold of me. Send me some pictures of your really cool ride if it's super custom, something nobody's seen before, or if you think it's just a great candidate for me to feature on the channel, you happen to be in the local Tampa area, I would love to get together with you and possibly feature your car on the channel. It's one of my favorite types of content to film. You guys seem to really like it as well. So once again, guys, don't be afraid to reach out to me with your really cool cars. On we go with the video. Just take a look behind me. This is a massive row of Jeep Grand Cherokee. Some of these are hybrids, some of them aren't. But this dealership has a ton of inventory. I'm seeing all sorts of Hornets. You've got Jeep Gladiators over here, tons of Ram trucks, literally as far as I can see over there. You've got Ram heavy duties back here. They have a lot of inventory on hand right now. I did write down some notes that I wanted to share with you guys from all of these articles that I recently read. But one of the things that the current CEO of Stellantis, Carolos Tavares, came under fire for was a quote-unquote misrepresentation of inventory levels at the dealership. And when the mid-year earnings kind of came out, they put that statement out there, a lot of people were shocked. I think a lot of the shareholders thought that the company was doing well.
For the time being, all of our brands, with no exception, are profitable. It is not by chance that we are a 10% AY margin car company, the only one to be double digits so far. It is just because our brands are great.
And then boom, obviously they're not doing well. I think a lot of people have come to realize that. And this is a company that traditionally would make, double-digit profit numbers, 10%, 11, 12. They were one of the tops in the industry.
Everybody is going in the same direction. And for the time being, as much as I am aware of, we are the only guy in town with a double-digit AY margin.
And then to see terrible earnings numbers coming from the first half of the year, a lot of shareholders were understandably very, very upset. And as I look around at all this inventory, I'm kind of wondering what in the world they are going to do.
Shipments in North America fell 18% in the last quarter, and I'm just wondering whether some deeper cost cutting, to John's point, is required to sort of bring that up to speed at a time where the EV transition isn't happening as quickly as people had planned for.
Exactly. And what you are saying, you say is not happening as quickly as the people are planned for. I would like, with all the respect, to correct that. It is not happening as quickly as the political leadership had expected. What we are seeing in the Western world right now is that the consumers are not supporting as much as the political leadership was expecting the EV ramp up.
So it just came down the pipe that Stellantis has a plan to heavily reduce inventory level down to 330,000 units by the end of the year. Apparently that was their target moving into the end of 2025, but they have bumped that target up to the end of this year, essentially giving 3 months. Today is the 1st of October, and they want to be down to 330,000 units nationwide. They're actually cutting shipments by 200,000 units so that they can sell through what they have. And they have promised that they're going to deliver on big incentives and big savings for customers on the 2023 model and the 2024 model years that are currently on the lots. So you can imagine what a lot of people are thinking. Well, if these things have been sitting for a really long time, do they have dealer rot, or what I call rot lot, right? They've been sitting for so long that the tires are flat spotted, the batteries are all dead. I mean, there are a number of issues. I've done other videos about exactly what rot lot is and why you should be worried about it. But what kind of incentives are we going to start seeing from Stellantis so that they can sell down on these and start delivering a profit? Now, because Stellantis is typically a company that delivers double-digit profit numbers, a lot of people were really taken back when the first half earnings for 2024 came in, and they were way, way below expectation. A lot of people feel like Carolos Tavares should have done a lot more, not only to warn shareholders, but to just do more to generate profit. So a lot of disappointment there. And they kind of took a big step back, Stellantis did, and decided they don't want to repeat the same thing for the second half of the year. So they put new expectations out there. They are saying between 5.5% and 7% profit versus the double-digit profits that people are used to seeing. So they definitely didn't want to kind of overpromise and underdeliver yet again. We're talking 5.5 to 11 billion negative cash flow. That's billions. That is a lot of freaking money to lose. And I just don't know how that can be a sustainable business model. It's no surprise that Stellantis decided that they needed to liquidate some of this inventory. After all, it has been sitting here for a really long time. And in a lot of the articles that I read, they cited specific examples. 332-day supply of the Jeep Renegade. So almost a year. Once again, a 327-day supply of the Wagoneer L, 323-day supply of the Hornet. You can kind of see where I'm going. When cars are sitting for basically a year, how in the world is that a sustainable business model? So yes, they need to get very aggressive with the incentives, with the pricing. They need to drive people in, and they need to assure people that not only are these good cars to buy, but they need to make them way more affordable. Now, the good news is interest rates are starting to come down. So I fully expect Stellantis to start doing a lot more to help customers, whether it comes to a better interest rate, like I know on the Hornets, 0% for 72 months, and they've got some other special pricing out there, like the Durangos. I heard even on the Durango Hellcats, they're taking a huge number off the sticker. Of course, we know those are not cheap, but I fully expect here in the next 30 days to see some massive discounts come through on a lot of the American-based companies, Dodge, Jeep, Chrysler, Ram, all of them. I fully expect to see Stellantis start announcing some big incentives out there on the 2024 and 2023 model years. I'm just waiting to see what happens. So as I've mentioned so many times in the past on my channel, I really do try and be objective, and I'm just giving you guys a little bit of news. I'm trying to see this as kind of a glass half full type thing. I know we've got some 2025 offerings that are going to be coming up here really soon. A lot of other manufacturers are already putting out their 2025 model year stuff. We have yet to see a single electric charger hit the lot. Chances are those vehicles are not going to do very well. And it is pretty hard to be an optimist when it comes to Stellantis news right now. I've also heard Carolos Tavares, the CEO of Stellantis, at some point will probably be stepping down. We'll have somebody else in. Who knows what's going to happen with the election and how that may affect the offerings that could be coming down the pipe from Stellantis.
In January, you said you were going to hold off on some of your investment in the United States because you wanted to see how the election played out. But are you basically saying now it doesn't matter who gets elected because the consumers are rejecting the government push towards the EV models?
Well, that's not exactly what I am saying. It's a little bit more complicated than that. What I'm saying is that we have received loud and clear the message of affordability that the consumer is asking us to deliver on EVs. The sooner we get there, the faster we are going to ramp up.
But ultimately, it is pretty hard to be positive with everything out there being so negative. But like I said, if you're looking for a deal on Dodge, Jeep, Chrysler, and Ram, pay very close attention to the incentives page, either at your local dealership or on the Stellantis' website, certainly the Dodge website. Different places you can look. Certainly call your dealership. But you know what? You may be able to get a whole bunch of money off a sticker right now because they got to get rid of all these things. And we'll see what happens. Anyway, guys, I will catch you on the next one. So until then, RacerX.
But at the end of the day, it all boils down to something we know very well in the US. Make the customer happy, period.